Welcome to the Real Estate and Wealth Podcast, your go-to resource for navigating the world of real estate investing and wealth creation. This podcast is brought to you by Calvert Home Mortgage Investment Corporation, your trusted, caring, and responsive short-term mortgage lender in Alberta and Ontario. We explore strategic and tactical solutions to elevate your real estate portfolio, drawing insights from seasoned Canadian investors and trusted advisors. In each episode, we dive into various aspects of real estate investing, including market trends, property analysis, financing strategies, risk management, and much more. Whether you're a seasoned real estate investor looking to expand your portfolio, or a beginner taking those first steps, this podcast is for you. Today on the podcast, we have Renée Huse. Really excited for today's conversation. I know you have quite the background, top broker, team lead, real estate investor, ex-commodities trader. I won't go into too many details. I don't want to share the story for yourself, but why don't you give an overview of what you have going on and kind of your experience, because I know you got quite an exciting one.
So thank you. So thanks so much for having me. It's super exciting to be here. I started trading commodities for about 10 years. And so trading natural gas, so buying physical assets in Alberta and moving them out to sell them to utilities in the East. And it was super exciting to be a part of that, but it was a super intense career. So my husband actually did the same thing. And when we decided to start having a family, we decided it was time to just start thinking about how we could have more life by design, if you will. And so we took what I, affectionately call eternity leave from commodity trading. And we decided to take some of the money that we were fortunate enough to make during those years and start investing in real estate. So at that time, in my late 20s, we started acquiring single family homes, and we acquired a lot of them really quickly, which was awesome. And during that time, I just fell in love with the deal side of it. So I actually got my mortgage license thinking I would only transact our own portfolio. And now, 10 years later, we have a business with Spire Mortgage Team, and it's amazing. I love it so much. So that's how I ended up where I am today.
So Renée, are you able to give us an overview of kind of your real estate investing journey from, maybe start to finish in as much detail as possible?
Sure. Yeah. I think there's been 3 phases to our real estate investment journey. Kind of that acquisition phase where we were just trying to get our hands on as many properties as possible. And then kind of that stabilization phase where we were just focused on stabilizing what we owned and building wealth. And then kind of the easy street phase, which is what we're trying to move into right now. So in the acquisition phase, I bought my first house when I was 21. And I always tell people that's when my investing journey started, because that was my very first mistake. I didn't think of it as my first house and how could I, refinance that and buy another one. I sold that, and it was such a big mistake looking back on it. And so my husband did the same thing. We each owned one property and we sold them to combine to put our money in another property. And then we had no income generating asset. And so it was like our first big real estate mistake, and so then we started doing some research, learned a lot more about real estate, and we're like, wow. And so we refinanced that house to take the equity out of that house and start buying as many properties as we could. So we started buying sort of one property a year, single family homes in Calgary. And the reason we went with single family homes is we didn't want stress. We were both working downtown. I traveled a ton for my job. I was gone all the time. Neither of us are that handy, both have real soft hands. And so we didn't want problems, right? So we did single family homes. We had no tenant problems. The people moved in, they paid down our mortgages. It was amazing. And then when I quit working and we really wanted to dive into real estate, big time, that's when we decided to take on our project in Edmonton. And so because we decided, okay, we got to speed up this journey. We want to get off the treadmill faster. We want more properties. We want more tenants paying down our mortgages. And so we really went hard into that acquisition phase. So we did another property in Calgary, and then we did a property in BC, and we ended up doing the properties in Edmonton. And so we went full out. We raised capital. Everyone we talked to, we were talking about hey, listen, do you want to be a part of this? So we went as hard as we could to get our hands on as many properties as possible. And so that was kind of, I would say like 12 years ago was really when we went super, super hard into the acquisition phase. The last decade, we really have spent time stabilizing the properties we own. So I think like after you acquire those properties, there is an element in your investing journey where you need to just stabilize. You need to get good tenants in there. You may need to make sure you've got the right mortgage products on those properties. You want to make sure you're taking good care of them. You've got a good property manager. We learned a lot of lessons in that time, but we really were able to stabilize and start seeing our wealth increase every year via mortgage pay down and cash flow. And now, just in the last couple of years, we are in the really fortunate position. We're kind of trying to start moving towards easy street. So super exciting. My husband retired 2 years ago. So it pays off. Yeah, like the 15-year grind, to trying to get off the treadmill a little earlier. So he retired. He works full-time in our rental business right now. We sold a few properties in Calgary that had some amazing appreciation. We decided, we're going to sell some of those. And we're starting to look at other investment opportunities for that money that doesn't require, a massive amount of leverage, that doesn't require a lot more hands-on work, just because we did it. We invested, we got massive appreciation, we got massive mortgage pay down, for those 15 years. And now it's time to maybe start moving that, in a different direction, because we don't need that, we're just into that new stage. Yeah. So super cool to kind of see this lifetime journey of it all. And it's nice to, kind of be through some of those stages that are a lot of hands-on work, but my God, do we ever have the story to say like, it's worth it. Hold on. It's because we're definitely starting to move in the right direction.
That's amazing. Your journey allowed you to be where you are today. So that's exciting. Any advice that you can give the audience?
Yeah, there's a huge one that I actually learned that I love to talk about and blog about. And it's actually, I think this is an opinion that I have that isn't maybe shared by a lot of long-term investors. I believe, based on all the things that I've done in the years, in keeping your problems close to home. So I think especially as you start your real estate portfolio and you're a new investor and you're learning how to build relationships with tenants and that kind of thing, it's really important to keep your problems close to home. I burnt tracks in the QE2 over the last decade, back and forth, cleaning up mistakes that I made. And honestly, when I look at my overall returns, I would have been better off just keeping those properties in Calgary, having a little, tighter handle on them, and not spending so much time commuting back and forth. I think even when you get a property manager, if you're really treating it like a business and you're really hands-on and you really want to make sure it's a successful cash flowing investment, it's easier when it's close to home, in my personal opinion.
Yeah, that's great advice. I like that a lot. Yeah.
And were you self-managing the whole time for these, say, 20 or so?
Yeah, so we actually have a property manager on salary. So I've done I've self-managed, I've had a property management company, and now we actually have an employee that works for us part-time. We just pay her an annual salary, and she does all of our running on the ground in Edmonton. But it takes a while to establish those kind of relationships. So we had to screw up for 3 years before we found this wonderful person that works for us in Edmonton. And so for us, we just felt that our highest return is having somebody that knows our clients. We call them clients, not tenants, that really knows our clients, is actively involved in our business with us. We have, just a direct one-to-one line of communication with her. So that's been successful for us, but took a long time to get there. And we're really fortunate to have her. And to be honest, it's a huge risk in our business, because if she ever decides she doesn't want to work for us, I'm not quite sure how we're replacing her. So, yeah.
I'm always curious to hear people's tenant stories. Do you have any stories that stick out in mind of bad tenants in there? I know we all have our fair share.
Yeah. But, I just think, I always say to people when they're buying a property, they'll say like, oh God, I'm so worried about tenants. I'm so worried about tenant relationships. And for me, I feel like, 1 in 4 people you meet is completely nuts. I'm obvious, right? So if you have 26 families or 28 families that you're dealing with, a few of them are going to be a little bit weird, it just is what it is. And so I think with any strong relationship in life, if you set clear boundaries and you have clear communication, whether it's with your kids or your spouse or your clients, right? If you set clear boundaries and have clear expectations, and then you hold those boundaries firm, you can make a successful relationship with anyone. And so, we have some wild stories, but a lot of them, they haven't gotten that wild because we set clear boundaries. And the minute that somebody stepped outside that boundary, we issued an eviction notice, or we had a hard conversation, or whatever it looked like. And so I think I honestly think tenant problems often are a function of tolerance. And people think I'm so hard-nosed in saying that, but with anything in your life, if you're letting someone in your life treat you like garbage, probably a function of tolerance. So if you just don't tolerate it, and you just don't tolerate stepping outside of those boundaries, I think you can make really, really successful relationships. So, in my opinion.
For sure.
Yeah.
For sure. Definitely. That's awesome. Yeah. Learning quite a bit.
Okay. Sorry. I have one other thing on.
Yeah.
I want to ask a question.
No, finish the thought there.
I was just going to say, the other thing that I think that we often lose sight of is that when we're running a business, and don't kid yourself, owning rental properties is running a business. It's not a sideshow investment. People think it's a sleepy investment, and yes, it should be making money while you sleep, but it isn't an investment that you should forget about. It should be managed like a business. And I think when you do run it like a business, you need to treat your tenants like clients. And I think if you just even use the word client instead of tenant, it's really effective. And somebody said this to me a long time ago. I think it was like an old RAIN meeting, 15 years ago. Somebody said, if somebody's signing a 1-year lease with you and your rent is $2,000, that's a $24,000 commitment. When I'm spending $24,000 and going to an appointment, I would expect somebody brings me a bottle of water.
Yeah.
Like, God, I would expect somebody brings me Timbits. Like, just, think about just starting that relationship with, this sort of in-service mentality, that you're in service to this client that's going to be leasing this asset of yours for the next year. And I think when you come at the relationship that way, it also just builds such a successful relationship right off the hop, because people are so grateful to be treated that way.
For sure.
Yeah.
For sure. Especially when there's such low vacancy in Calgary's market. Like, I know everyone's stressed about just finding a nice, comfortable place to live. So just going above and beyond, especially when first, tenants are moving in, to set that, gratitude to show your appreciation for them. Having them care that extra little bit of doing the small things around their house, keeping it tidy, letting you know of just any maintenance issues definitely goes a long way. So that's even just calling tenants client. I think that's a huge paradigm shift of what people should be doing in order to, just make sure tenants are valued.
Yeah, valued. Just start on the right foot, right?
Yeah. I'm curious, how do you manage your time with, busy family? I know you have someone part-time now with the rental properties, your mortgage business. Like, how do you keep structure in your life?
That's a good question. You know what? I'm an early riser. I'm big at getting up and getting after it before my phone starts ringing. So I spend a lot of time, working early in the morning before my phone starts ringing. I try to time block, and I just try to be really efficient. The other thing I should say is, with my big mortgage business, we do have an amazing team at Spire. So there's 9 other people helping me out on a regular basis, making sure that when I'm here doing something like this, all the deals are moving forward. And so I think that, I've been super fortunate that I have, decent time management skills, but in addition to that, I've just been so fortunate with staff, both in our rental company and in my mortgage business, that we've just been able to hire these amazing staff that I can delegate to and just trust that I don't even have to follow up. Like, things just happen. And so I'm incredibly grateful for my amazing staff. Yeah.
Sounds like you have really good procedures in place so that nothing falls between the cracks.
We run a pretty tight ship.
I'd like to touch a little bit on how you started Spire and kind of like what sets you apart from other mortgage brokerages.
Okay, so Spire Mortgage Team is part of MMG Mortgages that's owned by Heather Mann and Jackie Harris. And so I actually started out, maybe I'll just circle back just a little bit. So I got my mortgage license when I was transacting our own files. And then a recruiter actually reached out to me, and I was offered a mortgage specialist job at CIBC. And I always joke, I'd only ever had one job. I traded commodities at the same company from the time I was 21, and then I resigned. So I had one job in my whole life besides being a lifeguard. And so anyway, I started at CIBC, and about 2 months in, every client I met with at the bank, I was like, guys, you got to be a real estate investor. This is how we do it. I was so excited. So they fired me in 2 months.
I love the enthusiasm.
They're like, you can't say that to people. I'm like, I can't say that to people. That's exactly what we should be saying to people. So anyway, that was really short-lived. And then I started another small brokerage, and they were amazing, but just doing real, bit more kind of inside the box type stuff. And I live for this stuff. I mean, you could tell in my face, I love this stuff, right? And so anyway, that just wasn't a great fit, but I just thought, well, maybe this isn't for me. And then, I had a coffee with Jackie and Heather, like, throwing my hands around and telling them about my real estate journey. And I was really in the acquisition phase then. So I was just like grinding for how I was going to get my next house. I was so excited. And they were like, girl, like, you keep talking about it, and we'll sort out the mortgages, and so they taught me everything I know about mortgages, and so they helped me get going, and I just was able to be out talking about all the cool opportunities in real estate in Alberta, and they helped with all the underwriting on the back end, and then it just, as it kind of snowballed, I decided to start hiring my own staff, and so with that we decided to create Spire. So we started just kind of slowly, and now there's a pretty big group of us. So we're really excited about what we're doing. We really feel that we think outside the box, and we look at a client's holistic view. So like when a client comes to us and says, hey, I want to buy my first home, I think like instead of just saying, hey, here's the lowest rate, we're saying like, cool, I love that you said first, because we're going to position you so that it is in fact your first and there is a second, and I think that that's just it's, again, switching the paradigm of how we're dealing with every file. It's just offering the opportunity, right? Like, I think there's just so many people that just walk in the bank. It's like, here, Kate, here's your lowest rate, perfect, sign on the dotted line. And no one even offered them the idea that they could do so much more, right? And especially in Alberta, there's so much opportunity for us that we can actually buy that first house, right? So we're really fired up about trying to help clients understand that it is in fact just your first. So let's position it right so they're for the second, Yeah. So I would say that's kind of what sets us apart.
A lot of times it's very transactional. It's like you said, it's just what's the lowest rate and that's it. Like one and done, not gonna work with you again. So it's really good that you set them up for future opportunities. Yeah.
That's always the hope.
Yeah, totally. Yeah.
I can tell obviously real estate's quite a passion of yours. Where did this passion come from? Like was there a specific moment in life?
That's such a good question. Because people often think like my parents are really involved in real estate. And so my story is I come from Medicine Hat. I come from really humble beginnings. My parents will come from rural Saskatchewan. And they really had a scarcity mindset with money. And they did amazing, but everything was just saving. They were so worried. Like as an example, my dad passed away this year. And I was going through everything with his estate, and I saw that like his credit card balances were zero, but he was so scared. He'd been paying for protection on those credit card balances, like insurance, for years, and he'd never had a balance on them, but he was so scared of ever leaving a mess, or it was just like such a scarcity mindset. And same with my mom. It's like, pay off your house. I'm so worried that I might not be able to make it. And that was the mentality it came from. And I think that like, as I just, worked downtown, I was like, wow, leverage is a super powerful tool, And so like, I think a light bulb went off for me when I was trading commodities, because literally we were given a computer and we were given a huge revolving line of credit, like $500 million revolving line of credit. And they're like, hey, make money. And that was it, right? And so I was like, oh my God, you can borrow money and make so much money. And so my husband and I just started talking about that, and he again comes from humble beginnings, really conservative background, and so we just started talking about that, and we bought our first house and went, oh my God, like a year afterwards we're like, oh my God, it's like somebody else paid down this leverage and we made $10,000. Like we couldn't believe it, right? Yeah. And so then it's like, how can I do as many of these as possible, right? And so it was that moment, but I think it was like my commodity trading background that really offered this idea that you could borrow money and make money. And I really think the most conservative way to do that in the world is owning residential real estate, right?
Yeah. So first of all, sorry to hear, horrible that father passed away. So my condolences there.
Thank you.
Just your first deal, was it just a buy and hold? Was it like what type? Well, what are the deals kind of look like for your first deal that you did there?
Okay, so super good question. I believe so. This should be different for everyone. For me, it's always buy and hold because that's all I can do.
Similar to
burn, buy,
hold.
Yeah.
Exactly. Yeah, I can. And so for me, even like the renovation part, just like the way my life is set up, kids all over the place. mortgage company, even the renovation piece is like not something that I'm good at, understand, or have had a lot of success with. I do think it's an amazing strategy, but for me, I know that I just am in it for the long term. So buy a good property in a good neighborhood, take good care of it, build a strong tenant relationship, shut my eyes for 2 decades. That's where I'm at with it. And so they've always been buy and hold. So that's what I've looked at. Yeah.
So you don't renovate them. They're all ready to go when you buy them?
So I would like do carpet and paint, that kind of thing. And, but I haven't added legal suites. I've only ever built properties with a legal suite in them. Listen, I just want to say out there, you should be adding legal suites. Like, you can take on that stress. That is the deal you should be looking for. But I just wasn't something that I felt comfortable with. By the time we started investing, I had kids. I just was running all over. And so,
for sure.
Carpeted paint's about as big as it's wild as it gets.
You got to stick with what you know and what works for you. So, yeah, makes sense.
And did you have any training? Did you read any books, or you just found the property? You had experience, obviously, running numbers, being a commodities trader. And you just decided to go for it, or?
You know what? I joined the Real Estate Investment Network for a couple of years. I think probably Renée, a lot of people are familiar with that. And so this is a number of years ago. But I think like, even at that time, there was less about real estate investing. I think that there is so much information online. I personally think we have to be careful about things that cost so much money, or all these wild trading courses. I don't even know if I'm allowed to say that. But I think there's so much available information, and if you just want to roll up your sleeves, honestly, we all know this. Like, YouTube has just amazing amounts of information, whether you want to change a sink or, fix a toilet, or, understand anything about mortgages, real estate, whatever. There's just so many amazing opportunities to get information. And so, like, I'm big on, hey, I don't know how to do that, I'm going to look it up. And I'm also big on just building networks. So I've been so fortunate to just have built this amazing network of people that I can call and say, and even like I've had conversations, with you guys, or like, oops, sorry. I, had a conversation with Jesse just even recently, just like about, how I was changing some things that where we're at with our strategy. And so I just think ask all the questions, like be humble, come at everything with curiosity, right? Like don't think you know it all, because there's always somebody that knows so much more than you do. So that's my view, is just, really trying to dig in and just ask questions. Yeah,
for sure. No, I definitely think that's very useful, knowing yourself in terms of, just what you want in life, and shift priorities based off of what's important at the time, and knowing yourself and what you can commit to for time in that. I guess shifting gears a little bit, curious about your mortgage business. And I know you're quite active, doing an awesome job on social media.
Thanks.
Do you have a specific schedule that, Wednesday's film day? Like, do you have a rigorous schedule for how you produce, amazing content, and what that looks like?
Thank you. Yeah. So a couple of things. Obviously, everything is a work in progress. It's been 7 years of posting and learning how to do it a little bit better, and upping my game. I'm getting tips like just from this setup today. I'm like, I love these things. But I think what we try to do is we try to batch content once a month. So we'll try to shoot like between 20 and 30 videos once a month, hoping that we get, somewhere between 15 and 18 good videos that we want to post. This is short form content, I should say. I'm speaking specifically to. And then once a month, we try to post something a little bit more long form that we might put out on YouTube and send out in our monthly newsletter to clients, that kind of thing. So 2 very scheduled days. And then we still try to keep current, like if there's a Bank of Canada announcement or a major shift in bond yields or something like that. And so we try to, leave a little bit of flexibility in it, but I really try to batch content like once a month, a big shoot day where I just know I'm going to be out of the office. And batching it is key. I think it's really difficult.
Smart.
You have quite a few followers. So did you have any specific strategy for growing all your following?
Do you know what? It's a really long-term game there. I've been posting for 7 years. And I think very, very consistently in the last few years. And we just started on TikTok about just over a year ago. And I think we have 1,200 or 1,300 followers there, which has been cool, because that's actually not a place that I'm active, or even like my peers are active. So that's been pretty cool. We've actually had some really strong leads from that. And so that's all just a function of consistency, And I don't have any specific strategy around what I post other than I'm not super funny. And so I don't try to be anything except me. I love real estate. I love mortgages. I think that Canadians are just terribly misinformed and uninformed in our market about the opportunities available to them. And so I just try to talk about things that I'm passionate about, and like 90 seconds of good, solid information that might be helpful to somebody. That's it. Like there's no hip shaking, no pointy, none of that. Just like, this is what I know and I love. And it has, knowing these things have changed my life. Like fundamentally, being involved in real estate has changed the trajectory of my life. It's unbelievable. And I just want to share that. And so that's what I share. That's it.
Yeah,
that's awesome.
People can sense that authenticity and passion. So it's awesome. It's awesome.
Very fun. Very excited. Touching on misinformation, because I know there's quite a bit of it. What are some of the top things that you see on a day-to-day basis with all the clients that you serve, the inquiries that you get, that would be maybe like the top 3 misconceptions, either about mortgages, real estate, anything in the realm of?
Okay, that's a great question. I think a big one is focus on rate. And listen, we all want to leave more money in our pockets at the end of the day. So having the lowest interest rate is obviously important. But I have seen so much in the last 8 years, people miss an opportunity because they're focused on rate instead of the opportunity and the product and the return on investment. Like in the end, we should be looking at the return on our investment. So that's a big one. It's just real focus on rate, and then it's analyze, paralyze. I'm not getting my rate, so I did nothing. Well, guess what, guys? You left $200 grand of appreciation on the table the last 3 years in Calgary, right? So probably that rate would have been just fine, right? So there's that one. And then secondly, it's just, waiting for that 20% down payment. I really think is kind of bonkers. Like, get in, right? Like you want to start. You need to enter the market at some point. And if you're looking at it in a long-term view, having 5% down, whether it's for a flip project or something like you guys have your great flip project or flip product, whether it's for something like that or buying your first home, get in, right? There are options to do that without 20% down. So I think people are just ill-advised when they think that they can't do it without, saving that 20% down and avoiding their default mortgage insurance premium. I think that's incorrect. And then the other thing, is I think viewing alternative and private lending as something bad. I mean, we're seeing just a huge increase in small business owners move towards alternative and private lending because they don't want to pay a bunch of tax, right? So I think a lot of people think they need to pay, 40% tax on all the money that they're claiming in order to get into the real estate market. It's just not true. Like there's just so many opportunities for clients, using your bank statements, your financial statements, and that kind of thing to get into the mortgage market for small business owners or, investors. And I think not understanding those products and not being in front of the mortgage brokers that are specialists in those products has been a huge detriment to people. So those are kind of my top 3 things.
I love it. 3 really good things as well, too. Because I know, especially obviously working in the alternative lending space, clients are 100% focused on rate, but breaking down the full picture, ensuring, if fully open mortgage if they are flipping a property, ensuring, all the fees, terms, renewal fees, all that stuff. It's tough to change the paradigm and educate clients when they're just so dead focused on one specific variable when they should be looking at the whole picture there.
Exactly. There is a rate you should be looking at, and it's the return on investment, not the mortgage rate, right? And so I think that's a piece that people miss.
In terms of future of the mortgage industry, with technology and everything, where do you kind of see the future of the mortgage business in, say, 10, 15 years?
I surely hope that it gets easier for us to collect documents with technology and that, those ratings loosen a little bit, maybe. That we have access to, help clients with getting CRA documents and stuff. I hope that goes in that space. But we offer kind of a fully digital mortgage experience at Spire where you never have to see my face if you don't want to. But I think that this idea that you can just click 3 buttons and get a mortgage is almost detrimental. And I really think that the future of the mortgage industry will be hey, we can make the process less stressful with technology. But I think the human element of true advice and somebody that can truly understand your holistic financial picture and help you position yourself for the future is going to be more and more important as we move forward, right? Property prices continue to increase. We're seeing more volatility in rates. And I think we will continue to see more volatility in rates, right? Like, we are in a global economy. Information travels faster than it ever has before. We are increasingly reactive to media. People are making decisions based on things they see on social media. Like, that's not going anywhere, right? So like, the volatility in our rate market and our pricing market will only increase, I feel. And so having somebody that is a specialist that can look at your full financial picture and properly advise you for future growth, I think is just going to become increasingly important, because the market will become harder to transact in.
Yeah, makes perfect sense. This question slipped my mind last time, but any mistakes that you commonly see real estate investors make that is either a big no-no or that you just think would be good to share?
One of them is stretching beyond your means, because something will ultimately go wrong. That's the long and the short. You can't be involved in anything long enough, whether you're like a fashion designer and a weird batch of material comes in the wrong color or whatever. You can't be involved in real estate for 20 years and not see something go terribly wrong. And so you need to be prepared with, like, what we call like our holy crap fund on the side to actually, navigate those turbulent waters. And so I do think sometimes people stretch themselves beyond their means, or have kind of a, ignorance is bliss mentality that'll never happen to me. And ultimately something will go wrong somewhere. So it's not to say it's life ruining. It's more life ruining if you have to sell because you weren't prepared to try to, to have to navigate something for 6 months or something like that, right? So I think that's one. And the other one, we see this a little bit with typically people doing like a first time flip. You're not building the house for you. Like what you like for flooring and fixtures and that sort of thing does not matter. It's the return on investment that matters in the end, right? You're not moving in there. And so I think don't overbuild, and keep focused, keep the emotions out of it, keep focused on that pro forma, on that return on investment. That is so key, right? It's easy to kind of just veer off because you're like, wow, I love that. Doesn't matter. Especially if you're working with a contractor, they upsell you on this, on that, and not, deviating from the original plan and buying too high-end finishings for something that maybe doesn't warrant super high-end finishings. Exactly.
Obviously.
Yeah.
Perfect.
What percentage of your clients would you say are real estate investors?
I would say, so interesting. I'd like to think all of them, because we educate from day one that they should be. So guys, if you're watching, I hope you're all hearing this. So we really like to make from day one. But honestly, it's a smaller percentage than you would think. I would say probably only about 30% of our book is, a real estate investor. And the other thing is, I think a lot of people get focused or intimidated by the idea that like a real estate investor means somebody like me that, wants to just be like grinding it out with, 30 families. That's not it, right? A real estate investor is somebody that owns one house and then decides they want to upgrade to a new house and keeps that other house. Like, that's also an investor. And that person is also going to have someone else pay off a $500,000 asset for them in the long term. So like, that's an amazing investment. That's a real estate investor, right? So I think that, a lot of people get focused, like, to be an investor, they have to think about, this end game where you might own 10 or 20 properties. No way. Buy one more. Yeah. It's a significant change in the trajectory of your life to just own one more asset that someone else is paying for. Right?
Yeah, a lot of people are so focused on acquiring more and more and more, and they, forget about how much cash flow they're making off one. Maybe like 5 properties is better than having 20, 25, and maybe you should just, set the bar a little lower and celebrate those wins instead. Yeah,
especially with social media. I found there's always a huge push on more, exactly, bigger, and that. And I guess you never truly see behind the scenes of what's going on in that personal life and stuff like that. When you were starting out as a mortgage broker, how did you find your first, say, 10 clients?
So for me, I'm big on sharing what I love to talk about. Interestingly, I'm actually really an introvert. Like, I'm an extrovert and introvert. I love the sound of my voice. Like, I'm a real homebody. I like to be home, but I love to talk about this. And so actually, the folks at CIR Realty gave me an opportunity to teach this little class called The Reality of Rental Real Estate. And so I put together this big presentation, and I started talking about it, and it hit really well. It was really well received. I was like, oh my gosh, people want to hear this say, you know? And so like a few other brokerages and real estate teams over the years asked me to talk about stuff. And you listen, I also am like calling and offering and, you know, tried to get in there, but I just talked about the things that I loved. And that was it. I'm passionate about it. I think everyone can tell. And I just got out there and shared my personal journey. And so I started talking in Calgary. I started talking in Edmonton, and people started offering me deals. Yeah, it's like amazing. Like, it's just so cool to like be able to build a business out of something that you just. Yeah. I'm super fired up about it. It's super cool. Yeah.
And on that, was it like how to screen tenants, move in, buy it, like inspection stuff like that, or is it?
We talked about like how to do a rental pro forma, like so how to identify if a rental property might be a good deal or not a good deal. I talked about rent to own. At one point in time, I thought that was a great strategy. I think it could be a great strategy. I kind of got caught in the down market with it, so not something I want to be flying out with. I'll tell you that for free. But you know, like it was cool. That's a cool story to tell too, right? Like, because I get lots of people calling me about rent to own, and I have like a not a huge win there. So it's really cool to be able to talk to some of that stuff. So it was just, you know, creative real estate strategies for people that are getting started with it. So
that's awesome. Yeah. I think the main lesson for me there is just put yourself out there, and whatever you're passionate about, as long as you're sharing the message and delivering value, obviously be successful at it.
Yeah, totally. And I think that's exactly it. It's just, you know, like, where can you be of service? You know, at that time, I wasn't really doing much on social media. I didn't know anything about it. So it wasn't something I talked about, right? I wasn't trying to be professional with, you know, anything, or even, you know, financial statements or anything, you know, at that time. Now I do lots of different things, but at that time, what I knew was investment real estate. That's it. And creative investment real estate. I knew it really well. And so that's all I talked about. I was super fired up about it. And then it just grew from there. So I got to see new deals.
Fantastic. Did you ever do like any vendor take back type of mortgages when you were aspiring?
So I didn't, but I certainly see lots of that stuff across my desk now, probably just a function of, you know, sort of my network. And so I didn't see some of it. But I actually think it's a very valuable tool that people should be looking at in this market. Like, there's lots of opportunity. There's a real arbitrage for a lot of vendors too, right? That maybe still have a mortgage rate in the ones. It's harder for people to get mortgages. So like in terms of acquisitions, maybe somebody's happy to pay even, you know, 6-7% because they can't get their hands on a mortgage. And if you still have a mortgage locked in at 1.5, like there's an opportunity there. So I think this market lends itself to some creative real estate strategies.
Definitely. Anything, because I think you answered all my questions, and with 11 out of 12 passion. So I really appreciate that. Anything that you think would be valuable for the audience to know?
Or new investors. I think that would be interesting if you have any advice for people who want to get into real estate investing.
Okay, this is actually, so what I would say to that is that I think a lot of people get focused on where the market's heading. So, you know, everyone's mom, dad, grandma, aunt and uncle, best friend, cousin has an opinion on where the market's heading, you know, that it's ultimately, you know, rates are going to zero, prices are going to zero, you know, rates are going to, you know, 25, prices are going through the roof. Everyone has an opinion. In the end, I think that where we're heading is one of the strongest set of handcuffs that investors can get on their wrists. I think it's just, do I want to invest in real estate as a way to build long-term wealth and spend more time doing things with the people that I love, right? Like, that's literally what real estate can afford you. It is going to afford you the time to do more things with the people you love while you're building long-term wealth, right? You can get off the treadmill if you own enough properties. That's the idea. And so I think if you can stay focused on that and focus on the long term and out of the fray, right? Like all of the, like my cousin said, my dad said, then you are going to be able to build a long-term successful portfolio. And it's just one at a time, right? It's just one at a time. It's not a 5-year plan. It's a 30-year plan, right? And I just think if I had any advice, it's just stay away from the headlines, stay away from, like, yes, we have to be strategic. Yes, the property has to make sense, but just, it's a long-term plan. Look at it with a 30-year view and stay committed, right? Like, it's so easy. You get one tenant that kicks a hole in the wall or something like that. It's like, I'm done with it. No, that's not how it works. Stay committed, right? Mortgage pay down is an exponential curve. So the longer you hold that property, the more powerful each rent payment is for you. It's building more wealth, right? And so I think that's the thing, is just stay committed. It's a long-term game. Stay out of the fray. And I think you'll have a ton of success.
That's awesome.
That's really good advice.
Yeah, fantastic message. Leaving this is, just want to go buy more properties. Oh my God.
I know a good mortgage broker.
For people who are interested in reaching out, what's the best way for them to get a hold of you?
They can just grab me at Renée at spiremortgage.ca, or there's tons of resources on our website too, spiremortgage.ca. I blog, quite a few times a month, and lots of video and stuff. Check me out at Spire Mortgage on anything, LinkedIn, TikTok, all of it. I'm there.
Perfect.
Thank you so much, Renee. It was so great talking to you.
Thanks for having me. Such a pleasure.
That wraps up another episode of the Real Estate and Wealth Podcast. Be sure to hit that like button, share with fellow real estate enthusiasts, and subscribe to stay in the loop on all upcoming episodes. Get in touch with the team at Calvert Home Mortgage Investment Corporation by calling them at 1-888-752-4642 or email admin@chmic.ca. The opinions expressed in each episode belong to the individuals featured and do not represent the views of Calvert Home Mortgage. While we provide valuable insights, consulting with qualified professionals ensures that your unique financial circumstances are carefully considered, aligning your investments with your long-term objectives. Calvert Home Mortgage Investment Corporation is not a financial advisor, and we cannot advise you on making investments. There are risks to investing in real estate and the potential that you can lose all of your investment.